Good morning, everyone, and welcome to the Quantum Leap pre-market leap session for Wednesday, August 12th, 2015. My name is Doug McKay. I'm the founder of Quantum Leap. If you're looking for information on this room, it is a subscription room. We have a live trade room that we do on a daily basis, and then each morning we come together to do these pre-market trade plan setups. Email me at quantmleaptrading@gmail.com. Or give me a call, 647-545-8065. Before I get going, we just need to get the disclaimer out. This information is for the purpose of educating members who want to expand the knowledge of the business of trading. It's not for trading or investment advice. You are responsible for the trades or investment decisions you make. Trading futures or any instrument involves risk loss. Please consider carefully whether futures or options are appropriate to financial situation. Only risk capital should be used when trading futures or options. Investors could lose more than initial investment. Okay, so let's just do a review of yesterday. Yesterday, we talked about, actually, let me bring up the big chart. Yesterday, our main hypothesis was that we were going to fill in this area, this low volume area, with possibilities of going up to 87 and possibly going down into this triple distribution zone if we broke below that 79, 75 area. What actually did happen was exactly that. We opened at auction out of range, came up, rejected the range low from the prior day, came back down, tested the 82.50, which is one of our trade levels, bounced off of it, rotated back up, got inside of the range, but didn't get inside of value. And then they broke back out of range, came down, tested this 82.50 level again, and then just you can see the OTF was pretty active all day long. Broke through, and then we just slowly grinded our way down into that 71 target and tested the next key level for us, which was at that 2070, and then we found buyers and rotated ourselves all the way back up into the 79.80 area where we closed. I did not trade this well. I didn't get to trade most of the afternoon because I had to run my kids around, and I had actually gotten long at 71 1/4 and then closed out and then entered again at 72 1/4, and I had to leave, and I was going to take it down when we got up to the 76, and I didn't, and I'm sorry, this 76, and I didn't because I figured we'd rotate back up into the 80s, and so I left it on and I put my stop at break even 72 1/4, and then they came down and got me right here before rotating it. But you have to take a choice. My hypothesis was we were going to go back up into the 80s, and I thought that 72 would hold. What I should have done is put my stop below the fractal low here at 70.75. Only problem with that is then I was putting more risk on the table. I had already had a tough day. I didn't want to end up with a losing day because I had got myself in trouble earlier where I dug myself a 10-point hole before working my way out of it. So it was a wild day for sure. What was great though was the opportunity that presented itself last night. So last night, China came out, devalued their yuan even further, and we had this huge move down in the matter of 15 minutes. Where's my chart? We had this big, huge move down in the matter of 15 minutes. This is a 30-minute chart, but this move actually happened, most of it, in 30 minutes. Actually, let me bring up the other chart first. So this was the news. You can see that most of it happened in 5 minutes when the announcement came up, and it came up, and we broke that 70 level, which was a key level, and when the market gives you an opportunity, you have to take advantage of it, because a couple of things happen. First of all, we had a Mr. Sneaky, and the volume was just huge. Look at the volume here. So OTF was in the house last night, no doubt about it. So I presented to myself I was going to stay up and trade it, which I did. What I started with this Mr. Sneaky, and I started taking bites. And if you read through the chat Marvin and I had last night, my thought was we could come up to the 71 and a quarter, and then if we got above, possibly the 75. But in this action right here on a different time frame, it created a different opportunity, which was a measured move on this inverted flagpole. Now, I called it a two-way inverted flag because I wasn't sure whether or not it was going to come up and retrace up to the 38 or possibly the 62 or the 61.8. But I knew that I was going to watch this. So there's two different types of flags. There's pennants, which is two parallel lines of a reversal, and then there's the flag, which is the symmetrical. And so I drew both, and I put the chart in the room last night. And then the measured move is from the I used different people use it different ways. Some people measure the pole down to the to the pole, and then take the measure move from there. I always take it from the breakout. So I was looking for the breakout right here at 67.50, and looking for a measured move. And the measured moves we had was down to that 20.60 and a quarter on the 38.2, then 20.56 and a quarter on the 61.8, and the 100 is all the way down at that 20.49 and a quarter. I'm still running short. I traded most of the night with size, and I had a really, really big night, one of the biggest nights I've ever had in the Globex. But the point I'm trying to make is when the market gives you those opportunities, you have to take advantage of them, because it was clear when we broke the 70 level that we were going to go down and test that 60 level, and I was talking about going down and testing the year open at 2055. They actually got to 2053.75. This measured move will remain intact until we get above 68. Where are we trading at right now? 66 and a quarter. My Theo is all the way up into the 2100s. So I've got lots of space here. I'm getting very aggressive. Now, the reason I'm getting aggressive is we've broken a key level, which is this 61, the value area. Did this get moved? Just got to check to make sure my dates are correct. Yeah, it did get moved. There we go. Just want to make sure my levels are correct. So we've got this value area, and I'm going to bring this, I'm going to tighten this right up because I want to show it to you. So back in 2014, we were trading in this area, this balance area, for a very long time, with the value area high at 49.75 and the value area low all the way down to the 1987 and a quarter. And the microcomposite VPOC on this, whoops. Oh, come on. Won't give me this particular profile. There we go. The microcomposite VPOC on this is all the way down at 2011.50. So, and we've got a smaller time frame as well that gives us 2002.50. So now that we've tested below this 2060.50, and I'm using the 59 to be more exact, we've dipped down into this lower area, which doesn't have a lot of determined fair value. The biggest one is right here at 45 and a quarter. We've broken out a value. If we if we can't hold this value again, then we're going to come into price discovery lower, and I'm expecting a bigger move down in towards this 2011.50. Is it going to happen? I don't know for sure. It all depends on the reaction of the RTH traders this morning. There's going to be a lot of traders that are going to come into the market this morning that were out of the market last night, or not attentive of what was going on in the market last night, going to see the news, and they might get very aggressive to the downside as well. Usually when you get a break of a significant level, you're liable to get acceleration of that level. So 59 to me is the key line in the sand below. The one above us right now is going to be this 2070. Because if we get back inside of range, I think we could get stuck in these wicks today. We've made a big move. We had a 31.5 point move last night in the Globex. That's a big Globex move. Don't see those very often. The 20 ATR is running at 2023, so we're already way beyond the 20-day average true range. So just keep that in mind. So let's go and do our normal routine. You can never stop your routine, no matter what's happening. So let's just start with, let's get the news out. Sure. And again, I'm just doing this on the fly because I have had very little sleep this morning. All right, so Dudley's speaking right now. I don't know what he's saying. He is a dove, yes. Marvin is saying that Chinese growth is slowed. What happens in China has huge implications. Yes. There is a video that I posted in the room last night. Scroll back up and look for it. It talks about the currency wars. A very 9-minute video, very good video, and talks about the currency wars and how we're likely, Australia and Canada, etc., to start devaluing our dollar, and the U.S. is always the last one before they have to devalue their dollar. In terms of news, other than that, we've got jolts at 10 o'clock, and we've got crude at 10:30. We get the 10-year bond auction at 1, and then we've got federal budget balance at 2. So there is a little bit of news, nothing that should shake the market up too much. I think the big thing is going to be the headline news with all of the talking heads coming out and singing doom and gloom today and talking about this move that China made. So I think we're going to have a lot of headline news to digest. All right, in terms of the trends, I like to start my day just looking at a basic candlestick chart with a 9 EMA and a 20 SMA, and taking a look at slope and separation for where we are in the trend. Now you can see that overnight we came down and tested this 9 EMA. We're losing slope and separation on the monthly, so we are getting some weakness showing here, but the trend itself is still intact on the monthly. And again, the trend on the monthly, the long-term trend doesn't get violated until we get down into the 1990s. So a move down into the lower 2000s is not going to be the end of this trend. It's just going to be a move like this one. And you can see how quickly, you think about it, our year open is 2055, and we're trading right now 2065. So we're only 10 points above the year open. We really haven't had an explosive year as of yet. We've been range bound for most of the year so far. Going down to the weekly, now this pattern is starting to attract my attention. We need to get down into the 2037 area. I'm going to draw this out so you can see, because this could lead, I'm just looking at possibilities. I don't know if it's going to set up, okay, but we have our neckline here. We've got the left shoulder right here, head, right shoulder right here, and a measured move on this. If it does set up, okay, the 38.2 extension is going to take us down into 1996, so close to that 1990 to test the trend line, the 20 SMA on the monthly. 61 takes us down to 73, breaks the trend, and then a move down to the 100% takes us down to the 1935 area. So just I don't. This is not set up and validated yet. But if we come back down here, we do test those lower levels. We could see this head and shoulder actually setting up. In terms of the trend on the weekly, we have no trend. We have a possibility of a start of a trend, getting some separation now. We are trading below the 9 and the 20, so we have to start to think that a possible trend, but it's more consolidation in my mind in the weekly, but possible start of a trend. Let's get rid of this open interest. Now, there's also a skewed head and shoulder showing up on the daily as well. So just pay attention to that. You can see we're starting to get slope and separation to the downside on the daily, and we're trading below the 9 and the 20 on the daily. Still very early in a trend, but it's a possibility of a start of a trend down on the daily. Going down into the 4-hour, you can see that we are in a downtrend on the 4-hour. We do have a technical gap with the Mr. Sneaky, so we're likely to get some rotation back up. I'm looking for possible rotation to close the gap somewhere in the 69 to 70 level if we close it through price. We don't have any naked crosses on the 4-hour, but there are some ones that I want to point out to you on the other time frames. There's this one right here, up here at 2078 on that move down. Doesn't mean it's a 30-minute, doesn't mean that it's going to be filled today, but start writing these down because these will be future targets for you when we get near the vicinity of these naked crosses. Very rare that they'll be left open. And going down to the, so we have had a strong trend on the 30-minute, but 30-minute has been violated now, and we're trading above the 9 and the 20. So as we drill down to the lower time frames, the trend is being reversed. And you can see we had this very strong trend. We have this naked cross up here at 2081 and a quarter. We also have one down here at 2060.50, and this is the one I'm going to be paying attention to. But we do have a start of an upward trend on the 15-minute coming into the RTH session. And then we have the 5-minute where we came down, hit that low at 53. Look at this. FUBAR, Mr. Sneaky, Tech Gap led the turn all the way back up, to this 64 area. We do have had a trend, but we have violated the trend to the downside. We're coming back up to test the 9 and the 20. So kind of a mixed bag. As you drill down, the longer terms are showing start of a trend, and then as you drill down to the micro, we're getting into an upward trend. But now on the 5-minute, we've come down and broke below and violated the upward trend. So we'll have to wait and see. This is going to be consolidation. We'll have to wait and see if they can get back above the 65 level. And again, 70 is going to be the key for me. So let's take a look at the big picture. One more time, we're trading in this triple distribution of undetermined fair value, 75, 50, 71, and 66.75. We're just below 66.75 right now. The 62.25 is where we picked up buyers in the RTH. The last time down here, I doubt we're going to bounce from there if we come back down and test it based on overnight trading. So 60.50 is a signal of a breakout or breakdown. 59 is going to confirm that, and then below 59 we've got the year open at 55. Our overnight low, which was 53.75, is just above the CLVN, and then the big target this morning is going to be this 20.50.50. The value area or the microcomposite here on the last 2 days where we picked up buyers last time. I want to add this day and see if it shifts. Come on. Oh, won't let me. There we go. Well, when they won't let you do it, you just delete it. And then redraw it. I just want to see if I add the day with the wick. It doesn't change anything. It's still 50-50. All right, so that's going to be the big target this morning. Now, once we get below the 59, it's pretty blunt down here. There's not a lot of things to look at. We've got the measured move down to 49 on the inverted flag pole. So that 50, that's why 50-50. I'm just front running that measured move at 50-50. And then below 49, you've got 45, 40, 50, the gap close, and then you've got 37.75, 30.25, 26 we might get a bounce off of, then 24.75, 19, and 15 is the other gap, and 15.25 I should say, and then you got the 2011 and the 08.75 and this 2004.25. If we get below 59, I'll be looking to see if they start a trend day in the RTH. If we hold the 59, then I'm looking for a neutral day and getting stuck in the wicks, okay, all the way up to possibly close the gap at this 79, 75, 80 level. But I think we're going to see some major chop between that 79.75 and 60.50 level if we hold above that 59. So my main hypothesis is a test of this 59, and if we bounce from there, rotation and neutral type day, trading in here, very rotational. But if we break 59, I'm looking for a trend day and a move down into these lower levels. Whether we get all the way back down, beyond 49, I'm not sure. Big move last night, so we're already dealing with the 31.5 point range overnight. So let's take a look at the overnight. Start moving our numbers over, setting up our trade levels. Our overnight low all the way down at 53.75, and then our overnight high all the way up at 85.25. So when you're looking at this, and you got a 96% probability of taking out the overnight high or the overnight low, what do you think? We're 10 points away from the overnight low, and we're 20 points away or greater from the overnight high. My hypothesis is a test of this 59 and a breakdown to take out the overnight low and test the year open today. All right, and then our VPOC is 64.75. And we have this LVN in the start of this zipper line from the move down on that news. So 70 is going to be a trade area of great importance. I'm actually going to use 70, 75. And kind of like I always say, you want to be above 70, 75 to get long. You want to be short below 70. Now, you do have just above at 71, 75, you have the value area low. I can't even think this morning. So I'm going to move this up so it encompasses, okay, the value area low. So I really want to wait until we're above 71, 75 before I get long, because you don't want to try to get long and then have defenders of the value area low, hit you on your way up and smack you like a bug and then break back out of the range. So to get long, you really want to be above 71, 75, or we want to bounce off of the 59. And I really wouldn't get long until we were back above 60.50. So I'd wait for that test of the 59 and then get long off of the 60.50. So I'm going to put a trade area here at 60.50, but it's only going to mean much to me on the way back up. I'm not really going to try to take the break below 60.50. I'm going to wait until we break below the 59. I hope that's very clear. And then inside of here, if you're getting long off of 60.50, your first target's going to be the 75 area, but the main target is the 66.75. Same thing with the break below the 70 level. So either way, if we bounce off of here or come back and break above, I'm looking at 66.75. Or if we come back up here and then reject it, I'm looking for 66.75. So that's the lower of the three triple distributions between the 66.75. And you know what? Look at, that's the Globex low. What am I looking at? Bring this out here. So it's the three of this triple distribution area. And just to do this, let's get our upper numbers taken care of. Of course, no surprise, above the 71, 75, inside of value, inside of range. First target's going to be 75.50. And then second target is going to be this 77.75, 77.50, and then the naked VPOC, the naked close. Look at when we get into value, my whole hypothesis changes, because I think we rotate up through and test the this triple distribution zone all the way up into the 78 area, possibly even the 79. The 79.50, you've got, look at everything you got there. You got the close, you've got the midpoint, you've got the VPOC, you've got the VWAP, you've got a key, what was a key CLVN. So if we get inside of this 70.75, I'm got my swing short. Right now, I've got my my stop on my, I've got a single runner right now. I've got my stop at 72.75 because I think if we get back above 70, then this move down is going to be negated and forgotten, and we rotate up and we get stuck in the wicks here. So that's my uncle line right now for the swing trade that I'm trying to work. And my swing trade target is going to be down to that 2011 area if we stay below this 70 area. So above that, you've got the LVN right here at 82, but just above it, you got the value area high at 70 or 82 and a quarter. So that's my next area. Above that, first target above 83.50, the open, and then your overnight high. And once we're above the 82.75, then I think we're going to come into value again. Remember that the most traded price going back to February 5th is 93.50. The most traded price from from July 1st is 96.50. So, and we've got the 87.50, which was the prior microcomposite VPOC before it shifted up to 93.50. So once we're above 82, I mean, if we get above 70, I think we get a neutral day. If we get above 82.75 and break out of the upside of the value, then I think we're going to get a bigger move up. Not necessarily today, but we'll start creeping up where we left value above us up here in the 93, 96. But right now, my overall hypothesis is neutral to short and very short if we get back below 59. Anyway, so our targets up here are 87.50, then a breakout of the 88.25, and then above that, our main target above range and above value is the 93.50 with 96.50. And then we've got 98, so overnight high is not worth it. And then all the same numbers up here. The 2100, the 2101.75, not 0275, 0175. And then 2103.75, 2105.50, and then the key line in the sand above for a move for testing new highs is up at that 2107.50. To the downside, below 60.50, I'm looking for them to test this key line in the sand, and then below that, looking for a move to the year open, the overnight high, and then a test of the FOMC 51, and then 49 is the measured move. 50.50, remember, is going to be a big target below us. And then below 49, you got 45, the 40, 50, 39 area. $37.75, 30.25, 26.75, 24.75, and this is the old measured move. This is no longer valid, but it is a CLVN. And then you've got the naked close, and then our extended target below, our really big target at 2011. And then you've got a little bit of support at 08. Is it 08.75, 08.75? See, I don't even have to look at these numbers after after doing my homework all the time. I mean, I don't have to look at the charts to know what areas I'm going to be looking at. And then we've got the 2002.50 right in between these two naked closes at 03.75 and 01.50. So that's what I'm looking at in the ES. You can see we're trading in the lower side of this distribution around that 66.75, coming down to test that 60.50. So we've got 10 minutes to the open. So see, it'll probably come down and test this right off the open, and then we can see how they react to that. I'm not going to bother with gold this morning, although gold is gone up and hit 1121.20. It's trading 1115.50 right now. There was actually some opportunity last night in gold, and I was just too tied up in the ES. I didn't even take the opportunities. But the key in gold still is going to be now that we're holding above this 1112.70, look for them to come up into the 1860. The next big target above is the 1126.40, and then if we get continuation, which I'm expecting to see, a move up into this 1154.50 area. Below 1112.70, I'd look for a move back towards this 1108. Possibly even come down and test the value area low in the CLVN in around this 1100. 1100 holds, look for a slow grind up in gold, especially with what's going on now with the currencies. So you might see some flight to safety for those trading gold or looking for safety, going to gold. Keltner center line is 2064.75, our 24-hour VWAP 2064 and a quarter, our VPOC 64.75. As long as we stay below the Keltner channel, a move down to the lower Keltner line is going to take us to that test of the 59. We get above there, a move up to the upper Keltner line is going to take us up to 70.75 and that key level above us. So the Keltner is defining right now, okay, two of our key lines in the sand, the 71 and the 59. So that's going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.